All the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making any investment or trading decisions. Welcome back, traders. Quite a wild ride this morning, Dennis. Opened up, looked like we were going straight to 15,000 in the Dow.
Yeah. Yeah, not really, Joe. We opened up kind of strong. We had this 8-point open, but just flushed out. Actually led by Google, believe it or not. Google started the charge down. It opened down in the day. Couldn't even sniff positive when we were up $8 and went straight down. You know how I love my 2-day moves. I talk about them all the time. We had a complete breakdown off earnings and then boom, follow through here. Coming really close to this 600 area on Google. But just to say, Google started breaking down and then Apple followed. Google was down over $14. Apple just decided to play catch up here. And Apple has now fallen significantly from its 610 open. Actually fell at one time over $28 from where the opening price was. Got down to 582, Joel. Bounced off that level and is now trading around 589.
Well, first, let's just talk about the Google. Dennis, there was no bounce in that stock in the pre-market whatsoever. You would think after the huge drop that it had, the SPOs are up 8-10 points, and this thing couldn't even get above settlement. And then, boom, once it took out Friday's low, it was Katie bar the door. Moving on to the Apple, Dennis, even a blind squirrel can find an acorn every once in a while. I do not like the way the technicals have been shaping up in that stock. I think another thing that's working against Apple is you're just getting these traders that are just blindly buying the up open. I mean, it's a strategy that's probably worked since, the last 6 months or whatever. Buy it off the open, put in a 4-point stop and sell it, 10, 15 points higher on the day. But now what you're seeing is it's opening up. The pre-market highs are very close to the the pre-market highs there. It trades there for a few minutes, 9:30, 9:35, and then if that level is not taken out, it's ugly. But just going back, Dennis, 578. Remember, I was talking to you about that level. That's the level that was hit in the pre-market when the dividend players started to nibble in this. Remember that not too long ago,
Dennis?
Dennis?
Day there, Joel. Yeah, that was the 5. When they announced the dividend, it did hit that 578 level back then. We didn't get quite down to there. We only got down to 582. But, Joel, I got to give you some props on this one. You came out last night with your report basically saying, look, if Apple goes through 600, look out here. It went through 600 straight down $18 with nothing. Like you said, there was basically no support until that whole 578 area. Found a little bit ahead of that 582, but man, you had a great call there, Joel, cutting through that 600. So, like you said, even a blind squirrel finds a nut. You found a nut there, Joel. That was a great call on the Apple. Just to tell you, but Google and Apple often do trade together. And when you seen Google, and this was my tell too, actually, on the stock today, when Google started breaking down earlier on in the morning, it was about 5 minutes ahead of Apple. That's when I was like, oh, maybe I should try a short. I actually did get short Apple. I got short at 608. I figured if it made a new high on the day above 610, I was going to get out, but I was lucky enough, and I'm the scalper in me. I was like, oh, well, there was this little spot at 605 where it was final support, so I took $3 only out of it, so you can laugh at me. I'm always a scalper. I cover way too soon, but I should have reshorted when it went through the 600, Joel, and you had a great call there.
Well, 605, Dennis. I mean, it was the close. I mean, there's nothing wrong with with covering that area. Friday's low could have definitely have held up. So, that's the problem with it being a crazy $600 stock. I mean, you can't trade 2-3. Well, you could trade 2,000-3,000 shares and just get out and scale things up, as it goes your way. But it's hard to do with that issue. But Dennis, just real quickly before we move on with our earnings preview for the week, this open and this drop is looking bad here, Dennis. We've come down to one tick from the overnight low. This could get ugly, Dennis, if we take out this 1360 level. It could be ugly. That's all I'd have to say. So let's move on. Enough ranting and raving about what already happened, Dennis. We have a big week of earnings. You can see what earnings can do to a stock. Citigroup, J.P. Morgan. We've had a lot of negative and positive effects. But what do we have to look for tomorrow on the earnings front?
Yeah, there is quite a few here on the earnings front there for tomorrow, Joel. I know we're getting far into the show here, 5 minutes. We were going to do an earnings preview. We'll do this on a second show. We'll do the earnings preview just because so then we'll have a little bit more time to cover all of the earnings in depth. But just to cover, obviously, what's happening here tomorrow is Goldman Sachs. Goldman Sachs is trading, up a little bit here right now, trying to hold up. But they obviously report earnings. They open strong too. So many stocks open strong here, but have subsequently given back much of the gains. Obviously, we look at this 115 area that it was bottoming yesterday. We're perilously close to that now, Joel, on GS. Got down to 115.37, getting close to that 115. What do you think?
I think you just have to look for people that are short this thing. We've had a nice, breakdown from the 129 level. I think you're really going to find consolidation, 115, perhaps down to that earlier low that we had in the 113.5 area. So I look to be bids there. I don't look for a flush out in this stock like you've seen in Apple for a couple reasons. One reason is just hasn't had the kind of parabolic move that it's had to the upside. And just position squaring ahead of the numbers. They can make the numbers look awful good.
And then IBM, Joel. Man, this thing opened really, really strong. Opened up over $2. Surprised me. I didn't think it would open over 204. It did. Open 204.52. Went straight up, almost the 206 area, 205.89, but has given back with the broad market as well. This rally overall has just failed on almost every single stock. It was a broad-based rally, and now everything's falling apart, aside from the defenses, which we'll get to in a second. But IBM giving back much of its gains here too, Joel. What do you think going into tomorrow's report?
Well, IBM is just one stock that just rarely disappoints, but obviously you got some profit taking in here. That high at 205.97 managed to get 30 cents above the 2-day high, 205.56. So I look for this stock, to settle in this mid 202 range. We talked about had 4 lows in that area, and 206 to be major resistance, and it's going to gap one way or another tomorrow. It's going to gap above 206 and be off to the races, or gap below 202 and for sure test that $200 level.
Home Depot and Lowe's got upgrades today here, Joel. We talked about them on our earlier show. These things, again, opened and ran. So they opened up, Home Depot opened at 51.38. Ran straight up to 51.80. But again, everything rolling over here. It's come right back down. It actually went down on the day, 50.94. So a lot of times, this is an opportunity I want to highlight here for our traders. When you see a stock upgraded on the day and it goes for a nice run, and then the broad market starts selling off as much as we did, we sold off basically $10 from the high here in the first half an hour. It's kind of like throwing, the baby out with the bathwater here. This was making new 52-week highs very strong. When it can come back and you can buy that thing, at scratch on the day, a lot of times they'll get a bounce off that, at least the first time around. And that's what we're seeing. We had this, it got back to settlement, 50.96, made a low 50.94, 2 cents through settlement, and then bounced straight up 20 cents here. So you had a nice little trade on the Home Depot. Lowe's, similar story. It's come right back, getting close to settlement now. So we're 31.76. I'm looking at this 31.69.70 area. We kind of hung out there for the last 20 minutes of Friday's trade. It's only 6-7 cents away from there right now. Maybe, it gets a bounce off there the first time around too. And if the market goes to turn around, these stocks could be the first ones rallying there too, Joel. So I just want to highlight, when you get stocks upgraded on the day and they've been making new 52-week highs, and then they pull back with macro effects more than micro effects, then, you might get a lift off that at that old settlement area, Joel.
Okay, well, just to put a different spin on this, we are fairly sarcastic about the upgrades and downgrades, but you have to look, when there's an upgrade in a stock like this, and there have been some long-term holders in these Lowe's or Home Depot, and the earnings are out and everything's rosy, there's a lot of people out there that are looking to use that to sell into momentum. They know there's going to be day traders or Johnny-come-latelys hopping into the stocks. And, a big institution could say, hey, we've been looking to unload this thing. The volume's been light. let's use this a day to unload our position or to initiate a short. So what do we like our subscribers to try and use these upgrades and downgrades and these accentuated moves, not necessarily to enter positions, but perhaps use downgrades to cover shorts or upgrades to cover longs or to get out of positions or initiate new things. You can't take what the street says to you at face value. You have to have your own framework that you're trading within, and then use these upgrades and downgrades to exit or initiate new positions.
Yeah, just to clarify, Joel's kind of talking a different time horizon than I'm talking to, though. Like I was talking more for a day trade. He's saying, if you got a longer term swing trade on and you get 50 cents given to you off an upgrade on lows and it's been breaking out, a lot of times institutions will use those for selling opportunities, which is sometimes why you see stocks do give back, off the upgrades and downgrades. But what I was just trying to point out, not to counter anything that you just said, was just the fact that sometimes, you'll get a sell-off, a broad market sell-off, and we can buy a stock that was upgraded on the day. A lot of times it will get a bounce off that settlement price. So a shorter-term trade and a longer-term trade for you there from me and Joel. Moving on here, we obviously have a lot of defensive names that we've been talking about. We've been talking about the sector rotation for quite some time here, Joel, and the defensive names are actually quite strong today. Procter & Gamble opened up at the low, has rallied straight up since the low. Now it has pulled back a little bit here with the broad market, but opened 65.91 and went straight up 60 cents. What a move for PG, Joel.
Yeah, I mean it's hanging in there. I mean, they got a little bit probably carried away with it on the weekly outlook, how it was breaking down below this 66 level, and has found support there. So maybe a little quick to jump the gun on that, but just keep an eye on the 66.50 to 66.55 area. In fact, incorporate 66.37 in there. You have 3 highs within that area. You know that the institutions that were trying to unload, 1 billion shares at 68, eventually are going to bring those offers down. So even you are getting rallies in this thing, use the half numbers and the whole numbers really to lighten up the positions. They're selling into strength here, and 66.50 looks like the next identifiable area on the upside, and of course 65.80 looms large on the downside.
Coca-Cola, just one that we highlighted just to finish with, another defensive name. We know they have earnings tomorrow. This did the exact same thing, opened at the low basically, 72.14, and has run straight up 30 or 40 cents, got up to the 72.50 area, peeled off a little bit from there, but holding up pretty well going into earnings, considering the market's now down. Coke's still up 47 cents, Joel. What do you think of Coke going into the earnings?
I mean, it looks good holding 72 here, Dennis. I mean, it's tested that level several times. Either shorts, I'd see most likely it's people that are covering shorts here from the 74 level. I couldn't really see initiating new long positions here at 72. I think any kind of disappointment with the earnings, you could easily pick this stock up at $70.
Well, that's our show, our 10:30 update. We're going to be back with an earnings preview in about an hour here, so we'll post that up when we do get that show up. And any closing thoughts though for just today here, Joel?
We've had a pretty wild range so far, Dennis, from 1375 down to 1360.75, one tick above the overnight low. It looks like things are starting to firm up here, so the range may be in for the day. Look us to drift up, perhaps back up to the 368, 369 level and just meander. But that's about it, Dennis. Below 1360, look out for the weekly lows.
And that's our show for today. We'll be back in about an hour with an earnings preview show.